Hey everyone, welcome to a product review at Finominal. My name is Kaushik, I'm the lead engineer at Finominal. Today we are going to look at Parag Parikh Flexi Cap Fund. It's a popular fund in India, mostly for its humongous outperformance. A few things to know about this fund before getting into the analysis part of things is it's been trading since 2013, so it has more than 10 to 11 years of history. It has a huge AUM of 71,000 crores, and it doesn't have any restriction on market capitalization, sectors, or the international exposure. As the name, the flexi cap itself, tells you a lot about the restrictions, right? So it's flexible on the market capitalization. One interesting thing to know about specifically about Parag Parikh Fund is its exposure to international equities. We will talk about this more in the later part of the video. Now let's analyze this fund and see how well it has performed compared to its benchmark. So I will go to Alpha Analyzer to see how well it has done compared to its benchmark. So here we are picking the suggested benchmark for Parag Parikh fund is Nifty 50, as there's no perfect benchmark for a flexi cap fund, and you can also change the benchmarks over here. So the first thing that pops out is its humongous outperformance since its inception, right? You can see it in the performance itself. Compared to Nifty 50, it has done really well, and also you can see the excess returns over time. It has produced excess returns as well. So now let's look at the key risk drivers of this fund. So here you can see a beta of, on average it seems to be around 0.5, 0.6. A beta of 1 means that it's tracking the benchmark, so it moves along with the benchmark. So if the benchmark Nifty 50 goes by 1%, if you have a beta of 1, that means that the fund will also go by 1%. So you can see that it's not as volatile as the benchmark, as the beta is lower than 1. One interesting thing here to note is its high exposure to bonds here as well. So it, the bonds exposure has increased over time, and also it's volatile. It's not like there's been a consistent bond exposure. So I think since it's an actively managed fund, they change it according to the current market conditions. And you can also see here the consistent exposure to the equities, right? So most of the return drivers are equity drivers here. So now let's look at whether the fund has generated alpha, and over time as it also outperformed the Nifty 50 index. So before getting into that, I want to quickly point out the active share. It has a huge active share of 70%. So what does active share mean? Active share basically tells you how different your fund is to a benchmark. An active share of 100% means that there's no overlap at all. It's completely different from the benchmark. So you can see that it's the 70% of the holdings. So it's 70% different from the Nifty 50 benchmark, which is a lot, right? It's an actively managed fund. If you have if you have very low active share, that means that it's not actively managed properly. It's basically tracking an index, right? Another thing to point out here is its consistency of outperformance and also alpha. So out of 12 years, it has outperformed Nifty 50 for 10 years, right? Which is really good in terms of outperformance. And you can also see it in since 2013, which years it has outperformed. So you can see during 2018 and 2022, it has not outperformed Nifty 50. The final thing I want to show you is the consistency of alpha. So since inception, it has consistently generated alpha, which is something that most investors look for when selecting an actively managed fund. Now that we understand how it has done compared to a benchmark, its outperformance, how different is the portfolio itself. We looked at active share, how different it is from its benchmark. Now let's look at how it is, how Parag Parikh fund has done relative to its peers. So I have already pre-selected other 4 flexi cap funds, so you can easily search it here. I've selected the highest AUM funds in when it comes to the flexi cap category. So to see that, let's go to this tool called Asset Comparer. The one thing to I think the thing to notice here is the outperformance of Parag Parikh fund itself relative to its peers. You can see that here the 3 funds mostly kind of perform the same way except the UTI fund. So let's park this discussion of like the outperformance, what's driving its outperformance, right? I'll come back to that point, which I'm really curious to discuss in a moment, right? Let's look at other few metrics that highlights why Parag Parikh stands out. So here in terms of volatility, you can see that it has, compared to its peers, it has the lowest volatility here, about 11-12%, whereas if we compare it to its peers, right, on average it's around 15%, 17% here, 14%. And also when you look at in terms of CAGR, it has generated the highest CAGR compared to its top peers. This is another interesting chart to look at. Again, this also ties up to the discussion we're going to have on international exposure of Parag Parikh funds. So you can see Parag Parikh totally stands out here in terms of its correlation to stocks, right? So it's not as correlated as the other funds here. So it is has a 0.75 correlation, but not as high as 0.9 here. All the other peers have 0.9 correlation. We already discussed the CAGR and the volatility aspect of all the 5 funds, right? Again, you can see that you get this fund for low volatility for about 12% for the highest CAGR here, right? Now let's look at a few interesting things about its fund structure and the fund style itself. So you can see pretty much all the peers come under the low market capitalization category here. So you can see this is highlighted here, and you can see the market capitalization label here. Another thing to notice here is it's high volatile. All these 5 funds are highly volatile. So you can see the high here, and also except the UTI fund, all the other 4 funds are also highly exposed to the momentum factor itself. So it's the returns are really good in this category. Now that we have looked at its peers, right, the main thing to notice here is what's driving its outperformance, right? You can see almost all these funds are pretty much performing the same. What makes Parag Parikh fund stand out from its peers, right? The reason for its outperformance can be attributed to its international exposure. Yes, you guessed it, right? The international exposure is the reason that you can say to attribute its outperformance. To quickly look at that, right, I already checked the international exposure of Parag Parikh fund, which has about 15% equities currently, and also I checked the international exposure of these other flexi cap funds, right, just to show you that the other flexi cap funds doesn't have any international exposure. I will take the Parag Parikh fund and compare it with the HDFC flexi cap fund. So here if we go down to the breakdown by markets here, you can see that the HDFC doesn't have any international exposure at all, right? Whereas Parag Parikh fund has 15%. This is, recently it has 15%. If you check the international exposure for the other funds like Aditya Birla Flexi Cap or Franklin Flexi Cap, it doesn't have, it has 0% exposure to international equities. So we can safely say that the outperformance in the Flexi Cap category can be attributed to international equities. One thing to note about the outperformance, as we discussed, right, the international exposure, but if you go back to June 2020, also even June 2021, this international exposure was as high as 30%, right? So since it's a flexi, it's an active fund, and also it's flexi cap, right? The exposures differ depending on the fund manager, right? So it was higher before, so currently it is lower, but previously it was as high as 30% as well. Now finally we will look at how can we replicate this fund using two simple benchmarks. So here I have created a portfolio consisting of two ETFs. One is the mid cap 150. I've allocated 75% to it, and a Nasdaq fund, Nasdaq 100, which is a famous benchmark in the US. So it tracks the top 100 stocks in the US, right? It has a lot of stocks like Apple, Microsoft, all these famous US companies. So I've allocated 25% to it. And I've also created the Parag Parikh fund as a portfolio. So you just have one fund here. So let's compare these two portfolios. We can take it to portfolio diagnostics. Do you see what I'm saying? So you can easily replicate this using two funds with fraction of the cost, right? You're pretty much saving, the cost is reduced by half. Like the cost is reduced by 50%. That's a lot. Over time, you're reducing your fees by 50%. That adds up. It adds up in your returns, right? And you can see the performance is pretty much the same, and even it outperformed recently. But no, that's not why this has been picked. But you can see that the trends has been similar, right? Even if you look in depth into the factor exposures, you can see that there are same trends here. You have the same bond exposure here. You have pretty much the same equity exposure as well. So I think that concludes this video. What have we learned in this video is Parag Parikh, it has high exposure, not relatively high exposure to its peers, and that international exposure is the reason why it has outperformed its peer as well. And you can replicate this fund using two simple benchmark ETFs, which is one is the mid cap fund, another one is the Nasdaq ETF. So if you're someone, if you're looking for a fund that has international exposure, and also you're looking for an active fund which is flexible on market cap, and also as I said, you need exposure to some international equities, I think you should consider looking into this fund. I think that's it for this video. Thanks a lot for watching. See you next time.